Good morning, Predicted Trades family. Hope everybody's doing well. We'll start with a quick review. We started last week, which was an OPEX week, up near this 40.20, and we had that sell-off on Wednesday. That got us down to our daily moving averages, and we did a pretty good job holding all of those, and then Friday popping right back up. Pre-market, we're already tapping 4,000, 39.96, key level. So basically, just showing that pre-market, we are still very much in this buying sentiment to get back up into our range, to get back up and test this 40.20, and potentially break out of our trend lines from the highs of last year. We take a quick look. This should be a daily. There we go. There. So if we take a look, getting above this trend line from last year's highs at this point would be getting above 40.10. So basically near this first Keltner up is about where that trend line sits today. If we can get past this Keltner and on to 40.20, looking to get up to last week's highs, 40.35, all on the way to get to 40.56. If we take another quick look at our daily, the sell-off that we got on Wednesday, just back to moving averages. Now we're bouncing right back up. Basically trying to get through this resistance. A lot of things I saw, maybe on Twitter last week when we got that sell-off on Wednesday, everybody was screaming, we're going down, 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 3,600, 3,500, here we come, yada, yada. And at the end of the day, it was just a small pullback to daily moving averages. And this zone that we drew just from previous price action. Oh, don't do this. There. We were down in a balance range. Then we broke out to the upside. So I drew this last week saying that this zone, this box, needs to support this pullback. We basically broke out of a balance range, ran into resistance, pulled back to test the top of that balance range, the highs, and we held there, popping up. So in the overall structure of things, we are still looking like we want to break through this downtrend and continue higher. That will start to change if we continue to resist trend line and have another drop below these daily moving averages and give out this zone of support where we bounced last week. Then we're talking an actual sell-off back to the bottom of this balance range and maybe lower. So overall, going to continue to play the upside sentiment that we have going on. And looking at today. We do have a little 30-minute squeeze that we are in. We are trying to push out of it pre-market. And we have some of our pre-market lows back at that 39.80-ish at the bottom of this 30-minute squeeze. So we want to watch for any pullbacks to hold that 39.80. If we start to lose that, then we're going to fall back to some of these daily moving averages. That daily 8, daily 200 would be the main target to pull back to before taking off to the upside. Before I get too ahead of myself, let's pull up the economic calendar for the week. Alright. Really, you're still showing last week? Come on, Market Watch, get it together. So apparently we have a little bit today at 10 a.m. leading economic indicators. Then tomorrow we have PMI a little bit after the bell. Wednesday, nothing really going on. Thursday, going to be the big one. We have jobless claims, and then we have some GDP data. Also some trades data, core capital goods, Chicago Fed National Activity Index. And then Friday, oh yeah, that's the big one, PCE. So Thursday we've got GDP, and Friday we have PCE. And that University of Michigan inflation data. So it does kind of set us up for a light beginning of the week on economic data and some heavy hitters Thursday and Friday. So we could continue this rally into the Thursday, Friday data drops, where we can either continue higher if GDP and PCE come out good, or this could start to signal the next sell-off. So good to see that we have a light week to start as far as economic data. Maybe we do start to get a breakout of this trend from last year's highs, start to see a little rally beginning of the week and leading into the data drops on Thursday and Friday. Another scenario that we should always keep in our... Don't start freezing on me, Toss. Well, basically another scenario we should consider is that we are approaching this trend line from the highs. We are coming up on a nice little trend line from the lows. So we're basically in a wedge that could also lead us this week. Instead of a rally to break out, we could run into that resistance, start to fall back, and settle in a wedge between our daily moving averages and that trend line from last year's highs. So let's see if the buying sentiment continues, and if we can get this breakout and a rally to start the week. Overall upside targets right now on ES, getting up to that 40.10, 40.20, then up to last week's highs around 40.35, and then up to 40.56. Beyond that, we do have the 2-day squeeze top that spans from 40.71 up above 4100. In fact, from that 40.71 up to 41.36.5, a very key level. 40.56 is also very key. Those used to be lows of last year when the sell-off started in January, February. 41.36.5 was the first low that held us up for a while. Then once we lost that, 40.56 was the next low that held us up for quite some time before we went lower. So as we are getting ready to break trend line from last year's highs, we do have the first couple lows from last year that gave us support that we're going to be running into at that 40.56, 41.36.5 at the top of this 2-day squeeze. So we do have some resistance. Let's see if the buyers can get us through, or to at least, that resistance to test. If we do reject and start to roll over, want to see us hold pre-market lows at 39.80. Should those start to give out, then it's down to this daily 8, daily 200 zone. As long as we can hold there, it's still going to be attempting longs. But if we start to give out that zone, then we're going to fall back into our daily moving averages. We pretty much just tore through all of them and found support back up. So if we start to have pullbacks, we should expect buyers to be ready at those daily moving averages. So we have plenty of targets to the downside to play off of, and we have our targets to the upside if we can continue this rally. Moving on, NQ. NQ is definitely a leader to the upside last week. Anytime the market was trying to go up, it was NQ basically trying to lead us, while YM was kind of holding us back. So not surprised to see NQ already up near last week's highs and back above this 11,677 key level. We also have this first Keltner to the upside at about this 650. So overall, let's see if we can hold above that 11,650 and continue to try to push higher off of this 11,677. Goal of getting up to last week's highs around 760, and then pushing further with the goal of getting up to about, 11,900, 12,000. 12,000 a big key level. The daily 200 sits up near our next big key level, 12,100. So overall, the goal is to see if NQ can continue this rally and get back to this 12,000, 12,100. Very big key price points, and the daily 200 sits there at the top of this 2-day squeeze. So we've got our upside targets. If we start to fall back and lose that 650, then we want to target back to 11,500, where the daily 50 and daily 8 sit. Looking for support there to continue this rally. If we start to give out that 11,500, then we're talking back down to the daily 21, daily 15, and maybe even further than the lows of last week. Ready. Ready was also, small caps were also a leader to the upside every time the market was trying to rally. So definite rotation into small caps. Ready didn't even need to get back down to this support zone that we drew, and all of these stacked daily moving averages. Got pretty close, but overall, trucking higher. We are back above this next zone at about 1866, 1870. So looking for that to hold us up today on any dips. The daily 8 is just a hair below that, so I would accept down to that daily 8 at around 1862, but then want to see Ready bounce back up with the overall goal of getting back to 1900 and above it, maybe to last week's highs around 1916, and the top of this 2-day squeeze top. If we do start to give out this zone and that daily 8 around 1862, then we want to be targeting back down to last week's lows, where these moving averages sit that we did not quite tap last week. YM. There we go. So YM did a great job holding this zone that we drew out in last week's prep. Even gave it a tap on Friday before finally heading back up. We, you can see on YM, on NQ, we were already back up near last week's highs. On YM, we're still well below and still below our daily moving averages. Overall, if we can continue this move to the upside, looking for YM to stay above 33,400 and continue up to these daily moving averages, which basically span about 33,600 to 33,700. So looking to get up to those, reclaim above them, and continue the journey higher back to 34,000. But if we see any pullbacks, if YM remains weak and starts to fall back below 33,400, we should be targeting back down to last week's lows, this little balance area, which spans about 33,250 down to 33,000. So let's see if we can stay above our pre-market lows, right around that 33,400, and continue this journey back above daily moving averages. We need YM to play along and to start catching up, we should say. Apple. Took a little while to get going Friday, but once it did, was definitely pushing us higher and to the upside. We're arriving back at this 138.8 zone. We have the daily 50, just a hair above 139. Let's see. We have some of our pre-market lows down near 137, so looking for Apple to hold up around there on any dips. If we start to lose 137, we'll fall back to 136, 135. But if we can hold 137, looking to push through this zone and get back above 139 in the daily 50 and start pushing into the 140s. Amazon. Great recovery on Friday and back above this little zone that I drew last week. Around 96. So on Amazon, we got above our key level here around 97, so would like to see us hold that on any dips and continue this journey up to last week's highs around 99.5 and to get up to 100, 101.78, next big key level. But if we start to lose this 97, likely going to fall back to 96, this zone of support that gave out, and then we got back above. If we start to lose that 96, then we're talking back to 95, 94, kind of the lows of last week near 93. Google. Google had that monstrous gap up on Friday and went for more. Getting very close to our next key level at 98.78. We do have a 30-minute squeeze, so I would like to see us hold the bottom of that, but wouldn't be surprised if Google were to pull back to 96. Ultimately looking to hold above that this week to continue this journey up to 100, 101, and maybe further to 103. But if we start to lose at 97 and then can't hold this 96, then we're likely going to fall back to our daily moving averages below and this gap that we left behind on Friday's Gap and Go. Meta. Geez, can I click on the right thing? Meta almost got to 140 on Friday. Let's see if we can hold 30-minute squeeze bottom. I'd also keep an eye on these highs from the morning on Friday, around 138-ish. As long as we can hold above 138 or this 30-minute squeeze bottom, looking for Meta to continue above 140 and maybe get up to the next Keltner around 142.5. That does look like it is third Keltner, so we would be a little overbought at that point. We start to lose that 138, falling back to key level 137, and if we can't hold there, then back to the daily 8, down there 135-ish. Microsoft got up to that 240, 241 key zone where the daily 50 sits. Today, let's see if we can stay above pre-market lows, 239.5. See if we can continue above 241 in the daily 50. Get through last week's high of 244 with the goal of getting back to 248, 250 at the top of this daily squeeze that has started to form. But if Microsoft can't get going and starts to lose that 240, 239.5, then we want to be targeting back to these daily moving averages below, which span 236, 237-ish down to 234. So let's see if Microsoft can stay up and continue up to 250. Netflix had their earnings last week. Great reaction. But if we look at the earnings wick high and the lows from Friday, we are still within that range. Let's see if Netflix can remain above 340 and continue pushing higher, with the goal of getting up to 350, 361, 21, my next key level. If we start to lose that 340, we want to target the bottom of that range at 333-ish. Should that start to give out, we want to target back to 325, 322.5 to look for buyers. NVIDIA. Strong day on Friday for NVIDIA. And overall, I drew this little support zone from Tuesday's pre-market action. And if we look on NVIDIA, pushed up Tuesday. On Wednesday's sell-off, wasn't so bad. Then it gapped down right to that support zone, held it all day Thursday, gave it one last tap on Friday, and took off. So that's why I draw these support zones as targets. And the spot that we will either fall to, push from, that kind of thing. So overall, great push on Friday, right back up to new highs on the week, or at least highs of the week, pushing a little more now and near 180. If it can continue to the upside, looking for it to stay above 177.5, and keep pushing up to 186, 185, 186, where that third Keltner 6, 190, the next big key psych level if NVIDIA can continue. But if we start to lose that 177.5, we want to target back to 175 and then 170, the lows from last week where that daily 8 sits. And then below that, we have our daily moving averages that we didn't really get down to test last week. We just hit the daily 8. So let's see if they're going to continue buying chips. With Netflix reporting last week, we did have our first tech name report. We had a good reaction. So they might start loading for other tech names that are going to be reporting in February, and a lot of those will be chips. Looks like NVIDIA reports at the end of February. Looks like AMD will be next, and will be next week on the 31st. So something to keep an eye out there next week for AMD's earnings. On to QQQ. We got a nice 30-minute squeeze. Let's see if we can hold above pre-market lows, 382.5, and continue this journey up to last week's highs near 384.5. 284.5, and this key level of 285. Yeah, so to the upside, I want to target 285, 287, 290. If we can continue, but if we start to see a rejection and come back and lose 282, we want to target back to 280, and if that can't hold, then our moving averages below down near 278, where the daily 8 and daily 50 sit. Alright, so SPX did not leave behind any gaps and continued, dipped and filled the gap on Friday, then took off. Overall last week, held up. This gap did get filled on Friday. We fell to it on Wednesday. We were below it on Thursday. We filled it on Friday. So normally I'd get rid of it, but if we are going to have any kind of pullback, this is what we want to target. So there we go. Going to be dealing with a little gap up, just a few points, so not really worth noting on SPX. Overall, let's see if we can hold above 39.60 and this daily 200 at 39.68. On any dips, If we can't hold there, looking to continue up to that 4,000 last week's highs, 40.15, maybe up to 40.41, where the next Keltner sits. But we have arrived back at our daily 200 and that first Keltner to the upside. Let's see if we lose this zone early and start to lose 39.60, then we want to target back to our daily moving averages, 39.40, 39.30, and this gap zone that did get filled, but on Friday. But overall, if we reject and fall back, we want to target that zone. SPY. On SPY, holding above 395. We do have this weird little candle wick from our pre-market action and, after the bell on Friday. So we do have a couple of wicks back. Just, I note that or point it out because they are down near our key level of 388.5, what we sold back to and held last week. So if we do, at any point early this week, reject and start to lose our support that we were above, like 395, we do want to target back down to that zone or that key level. But overall, holding above 395 pre-market. So on any dips, want to continue to hold above 395 at the bottom of that 30-minute squeeze with the goal of getting up and continuing above 397, 397.7, up to 399.400. We do have a 1 hour squeeze also starting to form. So a range has been set. If we start to lose that 395, we can dip down to this zone, 392.66, 393.5. At the bottom of that 1 hour squeeze. As long as we can hold that, looking for the bounce. If we start to lose that zone, then we do want to target back to that 388.5. Tesla. Key levels, folks. Last week, made a nice push off 126 up to my next key level, 136. Sold right back to 126. And now we're made the journey back up to 136. If Tesla can remain strong, and it's having a decent gap up, so I'd say as long as when it goes back to fill the gap, it can hold above that 131.5. Looking for Tesla to bounce and get up above this 136, 137, last week's highs, and continue up to 140, 150. The daily 50 sits at 155. My next big key levels are up at 166. So in this whole journey, Tesla is finally holding above daily moving averages and starting to push into upside Keltners. So let's see if it can continue the journey up to that daily 50 with our daily MAs below as support. If we reject this 136, 140 area, there is a daily squeeze starting to form there. If we reject, you're going to be targeting back to that 131.5, back to this 126.5, near last week's lows. And on to VIX. Even in the sell-off that we got last week, we didn't see VIX get above that 21.5, and it fell right back down to 20 and below 20. So for upside today, VIX having a little gap up, I would like to see it stay under 20.3, some of those pre-market highs, get back below 20, come down to fill this gap, and maybe go lower than Friday's lows, down to 19. But if we are going to see a little profit taking, a little pullback, and visit some squeeze bottoms on the market and whatnot, we'll likely see VIX pop through this 20.3, 20.5, get up to these daily 21 around 20.8, and maybe try to rally back to this 21.5, right? So let's see if VIX can stay south of 20.5 and get below 20. It will kind of green light the upside. So that's it today for prep. Thanks everybody for tuning in, and we'll see everyone in the chat.